So in this video, I'll be analyzing the Nifty future on the hourly time frame and the 5 minutes time frame. So suppose if you are a swing trader or intraday trader, I'll be sharing my levels, that is the stop loss and the targets. So friends, here if you just compare by the way, this is the data only for the index futures and the call options and put options. So I'm not compiling for the stock futures and options. So whether if you also require, so we need to observe one important thing. Since yesterday the Nifty made a gap down and it was not successful in crossing the high of the S. Just observe the cumulative delta. Here we can see that overall the right now the view is bearish for the Nifty future. On the intraday you can take a trade, you can sell the 17,300 call. So this is a premium of somewhere around 60 rupees. Hi friends, welcome to Nifty prediction for tomorrow YouTube channel. So if you're not subscribed to my YouTube channel, you can click here to subscribe to my YouTube channel, and also you can watch my earlier videos on the Nifty future analysis and prediction for. So in this video, I'll be analyzing the Nifty future on the hourly time frame and the 5 minutes time frame. So suppose if you are a swing trader or intraday trader, I'll be sharing my levels, that is the stop loss and the targets, followed with the open interest analysis and the order flow analysis, and followed with the option chain, so that by end of this video you'll come to know that whether you need to go long or short. And suppose if you wish to take a long position, so where exactly you need to have your stop loss and your targets. So let us start this video on the hourly time frame. So we are on the Nifty future and hourly time frame. I've already drawn the important lines here. So these lines represent the resistance and support for the Nifty future. So this is an hourly time frame, I'm telling you, because I take trades for the weekly basis. So I'm a swing trader and I don't do an intraday trade on the 5 minutes time frame. So here I have just drawn the line. So whatever the line that you are seeing, it is showing us that 17,277 or say somewhere near 17,267 levels. So right now this line is acting as the support for the Nifty future on the hourly time frame, and this is a live market. Today is 15th of December 2021. So this is a live market. I'm doing my analysis in the live market. So you need to be careful whether you have already taken the position against the market movement. You can square off the position or you can hedge your positions with an options. So here I have I'm seeing an immediate resistance at 17,424 levels. So once the Nifty future crosses above 17,424 levels, then we can see an next immediate resistance at 17,596 levels and 17,686 levels. So once Nifty future crosses above 17,421 levels, we can see a target of 17,592 levels, 17,686 levels. So on the downside here, once if the Nifty breaks below 17,265, so most of the time traders confuse the breakout, false breakout, then take the trade in that and then they will make the losses. So I'll try to draw an simulating candle so that you will try to understand. See, the breakout candle should be something like this, and you should not take a trade based on this particular candle. You should take a trade if the another candle which is crossing the low of this candle, only then you need to take the short positions, whether you are an option trader or whether you are a future trader. So hope this thing is clear for you as an intraday trader. So always look to that you will be taking trades when the breakout happens and the successful candle which is crossing below this particular candle. So right now I'll switch to the 5 minutes time frame and I'll try to analyze the levels for today, that is 15th of December 2020. So friends, right now we are on the Nifty future 5 minutes time frame. So this is meant for the scalpers and those who wish to take the quick trade by entering and exiting with a small profit. Then you can see here. So we need to observe one important thing. Since yesterday the Nifty made a gap down and it was not successful in crossing the high of the yesterday. So high, so it did not also even touch the gap up, where exactly the point where exactly the Nifty gapped down from this level. So here I have drawn three important lines for you as an intraday trader. So right now Nifty is consolidating at the 17,000 to 93 levels. So you need to be cautious with this trade. So if suppose if Nifty is not successful in crossing above 17,293 levels, then you need to wait for a breakout below 17,262 levels. Then you can take your short positions in the Nifty future for the intraday levels. So suppose if Nifty future crosses above 17,288 levels, then we need to see a target of 17,368 levels and one more target at 17,426 levels. For this to happen, we need to have a good number of buyers in the market, especially the proprietors or the institutions who need to come into the Nifty future, and they should place a huge buy order. Only then the Nifty future can crosses above successfully 17,289 levels, and it can achieve 17,368 levels and 17,426 levels. So please mark these zones, the line where I have marked. So this will be the very important zone for the intraday trader. You can do your own analysis based on the support and resistance what I have provided here, and then you can take the trades here. So if you just observe on the 5 minutes time frame, the candlestick what we are able to see, it is actually a pin bar, and this is not successful, and once again we are seeing the sellers are taking control of the market. But right now I see that the support is extended to 17,260 levels here. So suppose if Nifty future crosses below 17,260 levels, then we can see a target of another 150 points from this level. So friends, I'll also show you the order flow analysis in the Nifty future. So if we just observe the cumulative delta, here we can see that overall right now the view is bearish for the Nifty future on the intraday level. So this is a 5 minutes time frame, and the yellow highlighted box what you are seeing, this is showing us the imbalance between the buyers and the sellers. So the left side represents the sellers and the right side represents the buyers. So here we need to observe that we are seeing two different yellow boxes, which is telling us there was a huge sell order, but which is not getting matched with the buyers. So now I'll just take you to my open interest data compilation and analysis. So I'll just compare the data for the yesterday's the 13th of December to the 14th of December, because today is 15th of December and we are already in the live market. So this data should definitely give you an edge to understand what exactly the institutions are doing. So whether they are bullish or whether they are bearish in the market. Friends, here if you just compare by the way, this is the data only for the index futures and the call options and put options. So I'm not compiling for the stock futures and options. So whether if you also require that data, you trade in the stock futures and options, and whether you wish to learn how to calculate this information, you can leave a comment saying that I want to learn the open interest data analysis on the daily basis. So here we can see that 13th of December, the foreign institutional investors, they were long in the Nifty future by 63%, and before that on 10th of December they were long by 67%. On 13th of December they reduced it to 63%, but whereas yesterday, that is 14th of December, they have reduced it to 57%. So you should be getting a view that the institutions are short on the Nifty index futures. So here when I tell index futures, it does not mean the Nifty future, it also includes the Bank Nifty future, because index futures combined with the Bank Nifty and the Nifty. So right now you already have a view that the institutions are short on the index futures. So they are holding only 57% long, which mean to say that they are short by almost 43%. And before to yesterday, that is 13th of December, they were long by 63%. So they are reducing their positions and the market is already falling. or it is kind of sideways movement to the downward movement. And in the option index call long positions, yesterday the FIIs are long only by 54%, and 13th of December, if we observe, they were long by 57%. So if we just observe this particular information, normally the option index call long, it is telling us when the big institutions are going long in a huge percentage, that is, I mean to say that in more than 60-70%, they are actually taking the market up. But whereas if you just observe the last 3 days data, and if you just compare it to the Nifty future and Bank Nifty future, you'll come to know that market is going down, and they are also doing the same thing in the open interest. And finally, on the option index put long position, on 13th of December, the FIIs were long by 67%, but whereas yesterday they have reduced to 66%. And the proprietors, I don't think so, they are actually the trend creators. They are just the trend followers based on the open interest, what exactly the FIIs are doing the transaction in the market, and the proprietors. But still, if we observe compiled, comparing or compiled both this data, they are actually bearish on the market. So hope this the open interest data compilation is clear to you, and you are a retail trader, you should be definitely be aware on the intraday levels, or the swing trader, that where exactly we can expect the market when the FIAs are reducing their long bet in the Nifty future or the index future. Friends, now I'll just take you to the open interest data. Friends, right now we are on the option chain data. So I've just included the delta, theta, vega, and to help you what kind of the strategy you need to build. Because tomorrow will be the weekly expiry for the Nifty future, and whether once we observe that the Nifty future is presently trading at 17,260 levels. So on the put side, you can observe that we can see a major open interest change at 17,200 levels and 17,000 strike price. So these two strike prices is actually acting as the support for the Nifty future. And on the call side, if you just observe, the 17,300, 17,500 is acting as the resistance. But here, more than the buyers, there will be a sellers in the option. So you should never get confused that when you see the major open interest change in any of the strike prices, there will be equal number of sellers, those who will be making money with the decay in the options, that is the intrinsic value or the time value in the options. So here we can observe that, suppose if you are interested with the option strategy, then I will suggest that you can implement the bearish call spread by selling 17,300 call here, because right now it is trading at somewhere 17,000. So suppose if you are interested in the option strategy to sell the options, then I am suggesting you that you can take a trade, you can sell the 17,300 call. So this is a premium of somewhere around 60 rupees, and you need to buy 17,500 call. So how you can implement this strategy in Upstocks? You just need to click on the strategy here. So once you click the strategy, first you need to select the position, the buy position. Before the sell position, always please make sure that you are going to first buy the hedging portion, that will safeguard you against any huge losses. First you need to click on the 17,500 call. So the premium will be somewhere at 13 rupees 70 paisa. Then you need to click on this sell. So here if we just observe in the naked eyes, what we are getting the premium is 60 rupees, and what the premium we are paying is 13 rupees. So this is almost 47 rupees premium that we are getting from this single lot of this bearish call spread strategy. So friends, you can leave your questions whether you want to know how you can further hedge with the positions, or how to do the adjustments for this the option strategy. Then you can leave your questions and comments. So thank you for watching this video. Please do subscribe to my YouTube channel, and once again share this video with your trading friends.